Prime Minister Datuk Seri Anwar Ibrahim is confident that the Malaysian economy will achieve stronger growth between 4 to 5% in 2024.
Among Palestine's top two officials were jointly charged with 161 counts of money laundering, criminal breach of trust and cheating.
Malaysia will experience drier and hotter weather due to prolonged lack of rain in the final phase of the northeast monsoon.
All right, thank you for tuning in to Niaga AWANI, and we're going to move on where the business loan market in Malaysia is a dynamic and constantly evolving sector, and that plays a crucial role in strengthening and supporting the growth and development of Malaysia's economy. So to discuss further and to delve deeper into the realm of this industry, we have the right authority joining me right now in the studio this morning, which is Edison Chong Wei Kit, the SME team manager of Intelligent Consultancy. Thank you so much for coming to Niaga AWANI. How are you so far?
Thank you. I'm fine. Great to be here.
Amazing. Okay, perhaps we could start this conversation with perhaps the reality and the background of what is business loan, and what is it, the purpose and types that are available for business loan, and how can it benefit a growing company especially?
Right. So business loans basically is a type of loans given by the banks to allow the businesses for further growing their business in a lot of aspects, such as reducing their costs, costs such as raw materials, starting out new branches. Right? So furthermore, when a company starts getting new jobs, such as contracts, projects, no matter what it is in terms of manufacturing or constructions, these are the facilities that will further
availability.
Yes, they are them to the next level by majority of the business that the problem they're facing right now is their tight cash flows, because when they start delivering their goods and products, they need time, 3 to 4 months to get their first payment for them to continue to roll, for them to roll to the next level, for the next step, next batch of goods. That gap is where businesses start to face issues, right? So how do we help them on this? They will start reaching out to us and getting facilities such as trade lines, overdraft and term loans, contract financing, and many more actually. But the most common that we heard in the market is trade lines, overdraft, and term loan, right? So in the market right now, currently, the most famous one is by Bank Negara Initiative, which is introduced by our Prime Minister. We call it the Madani program, right? Madani program is basically a product, a loan product, guaranteed by government agencies. There are two government agencies. That is the most common one, which is SJPP. We call it Syarikat Jaminan Perniagaan, right? And CGC, Credit Guarantee Corporation. What they do is they guarantee the financing up to 80%. Now, take example, if a company takes a loan of R1 million, right? So, in our point of view is, customer is having a risk of R1 million. But when these agencies comes into the picture, they are already taking up 80% of which is 800,000 of the risk. So, customers, their risk will be reduced by 80% to 200,000 ringgit. So, in that case, how does the bank look into this? Every financing has a different duration, interest rates, pricing, and all this is derived from risk calculation. When the government agencies came into the picture, the risk is greatly reduced. So the interest rate, of course, will be reduced as well. So it will go as low as 3% per annum. Yeah. So with this low cost and long tenor and high amount of financing, businesses can use this financing to breach on their gap on the delivery of their products to their customers. That's how they can further grow into their business. So with that, they will also have extra fundings to start getting into new businesses, extra contracts, so their growth will be elevated. Yeah, instead of just at one time I can only take up 3 projects, But with financing, I could probably take up 5 to 6 projects at the same time. Yeah.
So basically, this is as a support system for the business or companies out there. But
Yes.
for intelligent consultancy specifically, how do you identify the types of clients that would benefit this business loan, and what are those range of services provided by you?
Right. So basically, majority of our customers, they come to us only for one reason. They couldn't get it from the bank, right? There are various reasons why I couldn't get from banks, because the banks look at different industry differently. Some banks, they just love trading companies. I mean, they don't hate constructions, but they just less favor, right? So we have to understand what the bank wants and where this customer is standing at. If they are construction companies, of course, we won't look at facilities such as, we won't look into programs that is catering for agriculture industry. Of course, we'll start looking at banks that support constructions, and we will start understanding where customer at. If are they a kind of developer? Are they building bridges for government agencies? Are they building toll plazas? Right. So from there, we will start to get in touch with customers, get understanding their contracts. So from there, we could come up with a solution such as bridging loans or contract financings, which is more suitable in terms of their business nature. Yeah. And when customers come to us, they told us the same thing. They couldn't get from the bank. Or they could get from the banks, but it's not what they want. They are looking at, I mean, the contract is 50 million ringgit. What could they do with 2 million ringgit? So that is way far off from their financial planning. So from there, of course, we usually take part into maybe they will need at least 30% of the contract amount. For 50 million contract will be 15 million. So we have to find ways to cater the 15 millions from suitable banks for based on his industry. Yeah.
But when we talk about borrowing money or doing loans, the trust is the key word. So how do you build the trust towards a potential borrower in the future?
Right. So see, banks is actually a business whereby they have to trust us as well. So, and how do we build trust? Because the banks don't know customer. We know customer, but the banks don't. So the banks trust customer based on black and white documents. So customer has to do a proper planning in terms of financial planning, proper financial reports and invoices, and the company profile, of course, so that banks can understand who is this customer, what are they doing, where do they come from, where will they be the next 10 years. That gives the bank confidence to bring this customer to the next level. Yeah.
But can you share also what are some of the common challenges that businesses face when trying to get a loan approved? Because we know it's not an easy thing, right?
Yes.
We have to have some specific documents in hand. So how can they overcome these obstacles?
Right. So a lot of customers, one of the main issue is they have lack of documents. Right? Lack of documents, it doesn't mean that customer has no ability to conduct their own business. It's just that the documents that they are preparing is not up to date. For example, this business is on the property management. So when their rental income is actually being credited every month into their own accounts, that is their income, their sales, which should be recorded in their audited report. But their tenancy agreement, there might be chances that when it became overdue, they did not renew the tenancy agreement, and they submitted to the version that they submitted to the bank is the expired edition. So of course the bank don't take it as part of your income. So that when we do the start calculating the income versus the commitments, it doesn't jive, right? So in that case, the bank, what would the bank think? They would think like, you don't have that much income. How are you going to service our new debt? If you go down, we go down. So we need to prepare thoroughly, properly, before we actually start building trust with the bank.
So that comes intelligent consultancy, where
Yes.
it can help to provide financial tips or financial
Yes.
planning provider or solutions. So what are some of the practical tips on financial planning for both new entrepreneurs and also established business owners? Are there any difference, or there should be any difference from business sizes that requires a different approach?
Well, if we are talking about all sorts of industries, no matter what sizes, micro, SME, commercial, or corporate, I would say it's very important to have a financial buffer. What I mean by buffer is, no matter how well our financial planning is for the next 5 years, we somehow already foresee what projects we are going to do, what is the cost, what is the income that will be generated from the project. But what we can't predict is what's going to happen 5 years later in terms of economy. We don't know 5 years later, is the labor cost going to be fixed? Is the cost of raw material be fixed? Will there be changes? So we should always do some buffer. So just because based on our cash flow projection, financial planning, our total cost is 300,000, we only prepare 300,000 in our bank account for that. No, very risky step. We should always prepare maybe 10-20% extra. So maybe we leave a 400,000 just on budget just for that project. Then we keep it aside, we move for the next one, right? And the main reason, we probably heard some of the business owners say that I want to take a loan, but I have no jobs right now. I'm taking just for backup. My jobs is just fine, everything's going well, but I still need the funds just for backups, which is a very wise idea. Because banks is not here to save you. Bank is here to help you. That's the difference. Save you, it means that when you're going down, you need the bank to save your business. No, the bank don't do that. Bank is to help you to go to the next level, right? So if you have funds on backup, as and when there's a new job ready for tender, you are ready. If you are tendering a job and on your luck you got it, or based on your capability you got it, then you start looking for a bank, it doesn't mean the bank will help you. Yeah, so it's always wise to have extra funds on backup, right? That not only just for next level, it could also save you. Who knows when is the next MCO is coming, right? So when it comes and you start going to the bank, I'm so sorry, the bank can't help you. Yes, no one is going to help you but yourself.
So remember, guys, have backups. That's what Per Edison said. But per what you see right now, what trends do you currently see in the business loan market? Maybe that includes scams, loans. What do you see the trends right now? And maybe in the future, how do you anticipate and foresee the trends?
Right. The loan business is never going to stop. It will be, from the way I see it, it's going to go for a very, very long time. In fact, it will probably go forever. But who's going to take charge? See, the loan market is very competitive, be it banks and now a lot of other platforms coming out. They are not loans. They are P2P platforms, peer-to-peer platforms, whereby there are funds being generated from crowdsourcing, right? Crowdfunding. The interest rates is going to be much higher, but it is made available to more users. The loan amount will be much smaller, of course, because they are not as strong as banks. So when the banks have no way to help a certain customers, P2P will come into the picture to help them to grow, maybe on a slower pace compared to bank, but it actually helps them to grow to a certain level where they are strong enough to go into banks. Yeah, and when it comes to scam, we should always be careful of scams. We should always do our research. We do receive a lot of customers come to us that they say that they got scammed. So one thing that we need to be very wary of is always check who you are actually talking to. It is very important.
the authenticity and perhaps do some research of their background,
Yes.
at least. And taking a little relation with about technology, it's important to take a toll into the technological advancements right now. We have AI, we have automations. So what role does technology play in a modern financial consultancy right now, and how does intelligent consultancy integrated this technology to its services?
Right. We do affected by AI technologies, but a lot, quite frankly. Even banks, they are actually integrating AI technologies, whereby we start to see advertisements showing that some banks are doing digital financing. Customers can actually go online, submit their own documents, and get it approved in 2 days, and getting the funds within a week, which is a good thing. But AIs cannot think like us. When I mean us, I mean approvers, because we humans, we see things differently. We see what happens. We will start to predict based on today's market what happens if this happens, right? What will happen if certain situation happens? So that's why we can mitigate the issues. AIs, they are being coded that way. They see something, they react that way. But for us, sometimes when we see customers probably have missed payment, but we will start to find out why is the payment being missed. Is it they missed by 1 day because they just forgot it's past 12 o'clock midnight, or they let this job to their staff and their staff was too overworked that they have forgotten that they should help their boss to pay the bill given by their boss the task, right? So this all could be mitigated. It's just a human error, which I think it's not fair to reject the applications just because of this one minor human error. Yeah.
Indeed, we still need the act of human services to rather than just depend on this all technology and AI. But to wrap up this whole discussion and conversation, perhaps a little aspirations from you, the right authority, to on the sector. How can we further alleviate the whole ecosystem towards a better economy?
Right. There are many customers out in the market that they start going to the banks and they request a financing for a future project. But the issue is, project is not in hand yet. The project doesn't belong to you. You are still on tendering stage. So it will start to be like a chicken and egg questions. Should the bank give you financing first, or should you get the project first? Right. So what I would suggest, don't focus on this project too much, because it will be never ending. The bank will forever asking for additional documents, which is regarding to the project. And when you haven't get the project, you will be forever, back and forth with the bank. So there will be no ending. Why not spend some of your time on your existing projects, get extra fundings, keep the funds in your bank. So as and when that project like this happen again, start tendering, right? Then some might ask, if I take some funds as backup, I have to pay interest. Am I right? Okay. That is cost, right? So that's one thing I always tell my customer. Yes, there is cost. You have to repay the bank every month. But guess what? That funds doesn't have to come from your pocket. Let's take an example. You got a 500,000 additional financing from whatever bank that we are familiar with, Maybank, CMB, RHB, doesn't matter. We keep it in our current account or anywhere. Why do I say that it doesn't have to come from our pockets? When the funds of 500,000 goes into our current account, right? Where does the installment happen? With their own current account. What if we just place the 500,000 in the same account and we just leave it there?
Okay.
It will auto deduct from the 500,000, right?
Okay.
So the installment actually comes from the loan which the bank gives us themselves, right? So as and when we got a new project, then we realize, oh, I have extra funds in that current account.
Yeah.
Then you should start seeing how much balance do I have.
Okay.
Do I, how long was it ago? If 6 months ago, I should probably have 460 over 1,000. Then I should keep another portion just for the repayment, say 100,000. I could actually withdraw 300,000 for my projects. So in that way, yes, there is cost. We could use lesser amount, which 200,000 lesser than it was intended, but do we actually paying from our own pockets? No, we are actually rolling with the funds provided by the bank. Yeah, from that way, they are prepared for the installment. They have enough funds for the new projects, which to generate extra income, revenue to further elevate other projects. That's how they roll. Yeah, and with the extra earnings, they can actually get further financing from the same bank or other banks. Yeah, that's when the assets keeps growing, keeps growing. Yes, debt also keep growing, but it all comes back to the revenue and profits. Yeah.
That's actually a smart financial planning tips that comes from Edison itself. He's from the SME Team Manager of Intelligent Consultancy. Thank you so much again, Edison. Chong Wei Kit for joining me this morning. And thank you so much again for the insights on the business loan market. And you can find this whole conversation at astroawani.com and all of our social media platforms.